Morning, Fractal Effects team. Please make sure you read the disclosure before we get started. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Jump onto the charts in a minute. So again, today is FOMC. So we will be avoiding any U.S. assets. Majority of our session will be educational. We're just going to go over a couple of things, maybe back test a couple of assets, but we'll keep an eye on oil. Here I have US 30 up here in the right hand, just to keep an eye on it, but not something I'm looking to trade today. This is an older chart. Let's get rid of. So with oil, we have a downside expansion model. We're red on the daily, the 4 hour, the 1 hour, and the 30. We have a sell model, and we manipulated down. So remember, anytime you manipulate in the direction of your bias, you want to see it retrace to a fair value gap in the zone and a high probability area, for example, the purple zone. So currently we are above the purple zone and we're above this fair value gap. I'm actually more interested in this inverse fair value gap here. We'd have to see a bearish fair value gap be created. Then ideally we want to see this market draw back down to the blue zone. We have a couple of blue zones. There's one right there. This is the stronger one. But let's see what happens here first, because we did manipulate down and we did hit the end dog, new day opening gap, and a blue zone. This thing could go up, but I'm only interested in a sell today. Remember, the manipulation move has to match up with your bias. Right now, everything is bearish. We are bullish on the 1, the 5, and the 15, and I've said this before. You can take a counter trend trade as long as you do have a 1, a 5, and a 15 going in the direction of your bias, the direction of your counter trend. But I'd need to get a confirmation first, which we might get here. So this would change everything. There you go. Let's see if this confirmation sticks. We got 4 minutes and 29 seconds. And simple as that. That's how fast your bias can change. So even though we did manipulate down, bounce off the end dog and the blue zone, and it left a 5M fair value gap right there as well, right by the blue zone, it never tapped it. So this is not an entry I would have ever got, actually, because on top of everything else, it's actually against my bias. So my bias going into this session was bearish. We could still actually use the same. I'll leave that inverse fair value gap up here just to gauge where price is in correlation to it. So we already had a bit of an early retracement, as you can see. We hit that 20 EMA more than a few times. There is no real fair value gap. This one was violated. So the only fair value gap so far might be created here, but so far the only one is right here. Which is also our NYC opening fair value gap. Not hard to see. Got a lot of levels in this area. So we got 5M fair value gap, we got the blue zone, and we got the end dog. And we manipulated down originally with the bullish confirmation. That's more than enough confluence for you to take this long, but I would like to take it from here once we get the confirmation. So we have 46 seconds left. This confirmation will most likely stick, and then I'd like to get a retracement back into this zone and then aim for the end dog. Sorry, the end wog. That's the new weak opening gap. Ten seconds left. Okay, so we got a confirmation on oil, and we just got a new purple zone. Remember, the purple zone is associated with a session that took place before Asia, and we utilized these levels. Now we can use this secondary purple zone as another area of interest as well. Remember, the darker the zone, the stronger it is. Let's turn our standard deviations back on. So we're just a little under one standard deviation right now, with the NWOG sitting at 1.5. So I'm going to need that retracement. So as soon as we get a confirmation, remember there's a 85% chance that we will retrace back into the range. Here's the dealing range. There's the top of it, that gray line. There's the bottom of it. So there's an 85% chance that we'll retrace back into it. There's an 80% chance that we will not break the bottom of it. So this, between here and here, is where we look for our entry. And right now there's a nice zone right here. The only 5M fair value gap that has not been tapped. And also there's a purple zone right there that we got a lot of rejection off of. 1, 2, 3, 4 candles rejecting off of that. We're above the 20. Now let's see if this thing retraces or takes off without us. At the same time, while we're watching that, do want to go over a couple of things. Let's take a look at Bitcoin here for a second. Bitcoin sitting at 84,000. Remember, anytime you see a rally in any asset, always wait for a retracement. For anybody who saw that massive rally after the US elections, there was going to be a retracement. So anybody who got in at over 100,000, that was a foolish move. You should have waited. The market's going to continue up in that direction. There's always going to be a pullback to a key level and then an extension. It's all fractals. This is happening on a higher time frame. Confirmation, retracement, extension. It's happening on the daily, the weekly. We watch it on the 5M. So we're dancing right around 1 standard deviation. Any other time, I'd say that that was the low-hanging fruit. But today, because the NWAG is just right above it, that'd be more likely my target. But we have to get a good entry. So here we have Bitcoin. Let's see how Bitcoin did. We had a upside expansion. Bitcoin manipulated up first, I believe. Hold on, where's the bottom of that manipulation zone? It's one of the reasons I like to turn those standard deviations off. It kind of gets a little cluttered with a lot of lines. Oh, it's right here. So there's the bottom of the manipulation range. There's the top of it. So we manipulated up first. But since we have a buy model and an upside expansion model, what happens when we break the manipulation range in the direction of our bias? We wait for a retracement to a key level. That's either the blue zone, this is the highest probability zone for it to retrace to and then extend from, or the NYC opening gap if we are past 1030, which we are. So Bitcoin is using this. It's created a, or it's on the verge of creating a bullish fair value gap from here. We've had no confirmation yet. So obviously after 1030 you want to wait for a confirmation, but just sticking with the blue zone strategy, if we were looking at nothing else, this would have been an area of interest as long as all the confluence was there. This 5M fair value gap is presented, tapped. 1M fair value gap is presented, tapped. Otherwise, it's the blue zone. This is the highest probability the market could retrace to and then push from. But our bias doesn't change. If your bias is bullish, upside expansion model, bullish, the only thing that can change it is if you were to get a bearish confirmation, in which case you would just avoid trading. So here on oil, we left this fair value gap open, which happens to be right inside the purple zone. We pulled into it, but again, I'm not interested there because all my confluence was bearish. This is a counter trend trade. I only feel comfortable retracing back into the zone first, especially if there's an 80% chance that we are going to retrace into our box here. I would rather wait for that and then maybe look to see a rejection off of this purple zone or this fair value gap. So these two are the primary zones. Again, if it runs from here, that's fine. We're not chasing anything. So let's go over Saturday on Bitcoin. I've said this before, Saturday sessions are usually some of the cleanest. Sorry, this scrolling somehow just goes haywire when we're streaming live. Still working on it. That's Friday. Here we are on Saturday. I'm going to turn the standard deviations off just so we can see the blue zone strategy. So Saturday, we had a buy model. So as messy as this looks, this is actually, let me turn the spotlight off and just so we can focus on the blue zone strategy. Oil, finally doing that retracement we were looking for. We're back in the range. Now we want to see it bounce off of one of our key zones. It's bouncing off of the 20 EMA. Let's see if it hits the purple. I want to see, since there's no fair value gap here, as soon as it hits this, I want to see bullish momentum. I want to see a bullish fair value gap created. Let's drop down to the 1M for a second here just to see what's happening. Sorry. I'd like to see it come back to this 5M fair value gap where there's a lot of confluence. Ideally, I want to stay above this entire zone. If we're going to stay bullish, we have to stay above the N dog, the blue zone, the 5M fair value gap. There's a lot of confluence right here, not to mention the 238 on the 1M. This is good. This is the kind of retracement we want to see. Now there's actually room here. Depending on where we get in, I'm just going to eyeball it right here for a second. Still waiting for a bullish fair value gap to be created, of course. I'm just seeing what it would look like if we went to the consequence encroachment of the N dog and the consequence encroachment of the N wog. 3.5 if we get in somewhere around here. The lower the better. Let's go back to the 5M for a second. I'm assuming we're touching that darker purple zone. There you go. %61%. Right in that golden zone. I'm going to wait till at least touches the 238. So while we're waiting for that, let's go back here for a second. Remember, on a day like this, you're lucky to get any trade set up. You want to be in and out of the markets as quickly as possible. At 2 o'clock Eastern Standard, we have FOMC press conference, and you're going to see a massive spike most likely. They use these high impact news drivers to reprice the markets. Okay, so we backed up quite a bit here. We're back to the 18th. Fortunately, I think it was because we changed the time frame, so we got to go back to Saturday here. Okay, so here's Saturday's Bitcoin session. A lot of zones being created, but we had essentially a buy model. I just want to see, assuming we broke the top first of the manipulation range. So a bit of a consolidating session. There's the bottom of the range right here. I believe the top of the range is right here in the purple zone. So the market did manipulate to the upside first. If you manipulate in the direction of your bias, you just wait for a retracement back to the blue zone and then an extension, but that came way too late. That happened during the purple zone. So that was just a whole bunch of consolidation on that Saturday. But with more than enough opportunities to get out. For example, if you did get in here, or rather I should say here because this was after the break, you would have maybe got your 1 to 3 and or just got out after all this consolidation. So oil now rejecting. We still have not got a 1M fair value gap. We want a bullish fair value gap first. Otherwise, it could just continue dropping from here. Still no fair value gap presented. So no 1M fair value gap here yet. I actually prefer it drop lower. Take out these lows, past this 238, tap this area. But let's see. Remember, this is an inverse fair value gap that we're using right now. It's not as strong as this one down here. No fair value gaps as of yet. So it could use this fair value gap in the purple zone to actually shoot lower. Or I could just punch up from here. Let's see. But right now, there's no foothold that's been created. We are bouncing off of a purple zone on the 5M, but it's got to give us a foothold. Otherwise, it could just continue to crash. Let's see if this one sticks. "26 seconds. Okay, now we created that fair value gap and tapped it. Now I want to see the market close above here. Candle body. We got the 20 right under us. Get rid of this for a second. About 3 minutes to 11. We'll come back to this Bitcoin. I do want to see how it performed on that Monday. Seconds left. Again, I want to see it close above here. Sorry. My apologies. Sorry. So we got a closer. That would be a buy. Wasn't the best RR. 2.31. There's one standard deviation. I do want to see it hit the new week opening gap. Now let's see how fast this thing moves, because ideally we'd want to be out of here as quickly as possible. Soon as it, sorry, excuse me, as soon as it hits the bottom of the NWOG, that's when I would roll stops. It's a short move, but it's a short range with one standard deviation right here. So we've already taken the highs. Now we might have a little bit of a pullback here. Ideally, we just want to see this thing continue to run. So as soon as it hits the bottom of the NWOG, I would move the stop losses and be in a safe trade. Just a whole bunch of back and forth. This is why FOMC like days are just better to skip. Can't trade anything else. Oil's the only thing that you can really take a look at. These are the days you want to jump into the market news section of Fractal Effects and look for actual, see what the analysts are saying about the stock market. Keep in mind these are actual third-party analysts, professionals that are giving their opinions. It is not financial advice directly from Fractal Effects. And you can see what they're saying though about specific markets, what markets are moving, what markets are stagnant, which ones are going to drop, most likely. And then you do your top-down market analysis, which we teach in the Learning Hub. You should be able to mark up any chart, look at any stock, and be fully cognizant of which direction it's going, where the pullback's going to be, how far it's going to extend. You should be able to do all of that on any given chart in a matter of minutes. When I'm marking up a chart, it usually takes me less than, I want to say about 5-7 minutes per chart. That means in a matter of 30 minutes, I already have 6 charts marked up. 6 stocks, 6 assets that I'm paying attention to going into the week, and then I set alerts. As soon as those alerts are hit, then I go in and actually take a look. And if they're not hit that week, I don't even bother to look. At 11:05, starting to get some anemic candles. This one big fair value gap left here, so there might be another retracement to this zone before pushing up completely. We're now past 1 standard deviation, heading to 1.5 in the NWOG. As soon as it passes that green line, that's when you want to roll your stops. Take some off the table. It was a short move, but again, take what you get on days like this. There you go. So you should officially be in a safe trade. Again, if you're following along with this in a demo account, this is great practice. You should be able to do this on your own. Goes to show you how strong the purple zones are and how strong the blue zones are. If there's a purple zone in between a blue zone, that becomes your the official zone that like the market wants to pull to and push from. You don't have to wait for it to come to the blue. That's why on the 5M, I'm just going to go up here for a second. We bounced right off of not only a purple zone, the strongest purple zone. So remember, the darker the zone, the stronger it is. That's the darkest color you can get when it comes to purple zones. It's almost like a maroon, magenta, whatever you want to call it. That was the strongest one. So we bounced off of it, came up, bounced off of it again, and then pushed right through this purple zone. We didn't make it down to the blue, unfortunately, but that's okay. Then as soon as it hits the midpoint here, you should be out fully. Not trying to get too fancy today. And almost delivered. A little bit higher, come on up. You can even get out here, like anytime you see this kind of gesticulation, all it means it wants to maybe possibly do one more retracement before dumping, going over the top, which can get annoying again, just depends on your patience. 8:10, or sorry, I should say 11:10 at on an FOMC. Take what you can get. I'm not going to battle over a few pips here. Just going to set up the next chart here. Give me 1 second. There you go, successfully crossed the TP. I wanted to take a look at let's take a look at how NAS did in this last few days. Without any other chart markups. We're only going to use the blue zone strategy. So just one quick recap. This was a risk to reward of 2.31. Not my favorite. But again, you take what you can get. Could go a little higher, could be a push to 3, yes, but this was the area of interest, and it delivered right there. For anybody who always says this is not an algorithm, this is controlled by buying and selling pressure, yeah, it's ridiculous. That's why we're able to use these levels, because we know. When was the last time you saw or heard anybody even talking about the NWOG level or the NDOG level? Bounced off the new day opening gap, went right into the new week opening gap. Not a coincidence. So again, since that's been delivered, let's take a look at NAS. Just give me 1 second here. We got about 15 minutes, so just give me 1 second. So here we have NAS starting from Monday. So Monday we had a sell model. We manipulated down. Wait, sorry, that's Tuesday. Wait, let's back it up one more day. Yeah, Tuesday we didn't get much price action yesterday. For anybody who was following us live, let's look at Monday. Okay, there's Monday just using the blue zone strategy and nothing else. So we had a buy model. We manipulated up first. Sorry, 1 second. So yeah, we had a buy model, manipulated up first. Again, what do? When the market manipulates in the direction of our bias, we wait for a retracement back to our key levels. That's exactly what happened. There was the bottom, by the way. You can see the bottom of the manipulation zone is sitting right in the NWOG, this green line. We manipulated up, came down all the way back to the blue zone, and then we looked for a trade setup here. 5M fair value gap tapped, 1M fair value gap tapped, some gesticulation, boom. That was Monday. That was the day that we weren't live, didn't cover. And then Tuesday we were live and got a whole bunch of mess. But we did see a successful setup on the US 30, I believe, yesterday. Hold on 1 second. So yesterday was the US 30 trade, which was also successful. We used the spotlight strategy. Because the market never retraced back to our blue zone. Just kept dropping, very, very bearish. So then we ended up switching to the spotlight strategy. So Spotlight strategy, we had our confirmation. Retracement, small retracement here. We had another retracement here, and then we finally dropped. Small range, so we did get that one standard deviation right into our NWOG, which is what we were aiming for. So we fully delivered yesterday. And then today we had our oil. So there was always an opportunity. There was an opportunity on Monday. There was an opportunity on Tuesday. There was an opportunity on Wednesday. You just got to know what to look for. And now we're out. We're done. FOMC is again at 2 o'clock. But we've already taken a successful trade, so we'll be sitting out. We won't have to worry about all the gesticulation and the spikes. And then going into tomorrow, let me just take a look at the economic news calendar. I know there's more news dropping tomorrow. We have unemployment claims at 8:30 Eastern Standard Time tomorrow. So we will be live tomorrow, most likely taking a look at oil again or any other foreign pairs. But just wanted to go over how the strategy performs. Both of these strategies you want to use, they're both effective, they're both strong, but you got to know when to switch from one to the other. When you have a runaway market that never came back into your zone, so if I have a bearish bias and I'm waiting for the market to come back up into my blue zone so I can take that sell and it never comes back, then I just switch over to the spotlight strategy that lets me know, hey, it's not going to go back. We got a confirmation. There's an 80% chance that it will not even pass this point. Okay, well then I start looking for my trade setup here. So it went from me looking up here to me looking down here. Because my bias didn't change. I'm still bearish. If anything else, it's extremely bearish if it can't even come back up in here. But then after 10:30, I switch over to Spotlight and I use that as my confirmation retracement extension. So we were able to find a trade setup every day this week, even though it's FOMC week. Just proceed with caution. Know what you're doing. Know what to look for. Monday it was NAS, and it's funny, it was on different assets. Monday it was NAS. Tuesday it was US 30. Today it was oil. All successful. We will conclude there. We'll be live again tomorrow. Again, proceed with caution at anything you're looking at this week. Have a good rest of the day, and we'll see you.